I'll share with you 7 things you need to include into a trading plan so that your trading career is going to last and you're going to be consistently profitable. So your trading plan, you can have this in a soft copy, hard copy, but studies have shown that when you write something down on paper, you're going to remember it more often, okay? First thing, your trading plan. You need to have this on top because this is the most important thing that will help you last in the long term. What do you need to include? Your trading philosophies. Now, I know all this gibberish, motivational stuff, you might think it's not important, but it is very important because what's going to prevent you from getting to emotional trades, trading when you shouldn't trade? Trading philosophy. For example, my trading philosophy. I am a back tester first, risk manager second, trader third. So that every single time before I enter a trade, I will ask myself, what am I risking in this trade? Every single time. Aside from that, you're gonna have 3 things, okay? Short-term goals, medium-term goals, long-term goals. Common sense again, right? Common sense is not common practice because if your long-term goal is something that is too monetary, you're not going to last. Because things like, I want to buy a Lamborghini, I want to buy a mansion, that is not going to motivate you in the long term. I can guarantee you that. But if your long-term goal is something like, I want to give my family a better life, then the Lamborghini, sports car, luxury vacations that you're able to afford is a secondary result of providing a good livelihood for your family. You see the difference? So long-term goals is mainly what do you want to achieve in the next 5 years, 10 years. Medium-term goals, this year, what ROI do I want to achieve? Percentage ROI. Remember, you gotta set your goals not based on monetary terms. You cannot be like, I will earn 50k this year because it's very dangerous to your trading psychology. It has to be, let's say I want to earn 30% ROI this year. When you focus on pips, percentage ROI, you're going to be less prone to emotional trading. Saying this based on experience. Short-term goals, again, we cannot be like, I want to earn $100 today. If you try that, it's going to cause a lot of open trades that you shouldn't be opening. You know what I'm saying? Now, there are successful traders who do this, okay? Whenever I make 10 pips today, I'll stop. In fact, there are traders who name themselves, I'm a 10 pip trader and that's it. I'm a 100 pip trader and that's it. Why is this so important? Not so much for you to earn money only, but more so of no discussions, no excuses. If you earn 10 pips today and you're feeling good today, wow, today must be my lucky day, whatever trade I open is going to make money, let me make more trades. Guess what? You're going to lose your 10 pips. May the pips be with you. Okay, so this is the first thing you're gonna include. Second thing you need to have, what kind of asset currency do you want to trade and focus on? Now, a lot of beginner traders, especially when it comes to forex, I've made this mistake myself in my first year of trading. Trade whatever I like. Wake up today, euro dollar, let's do it. Wake up tomorrow, feeling like pound dollar, let's do it. Do I know what the currency is all about? Not really. Under your first component, write down, I'm just going to trade Aussie yen. That's it. I'm just going to trade major pairs. That's it. Only tech stocks, for example. Why is this so important? If you don't write down what you are supposed to be trading, you'll be just like me in my first year of trading. Trade anything you feel like trading for today. So we don't want that. We don't want that. The reason you have a trading plan to begin with is to be disciplined, to stick to a rule. And to ensure that you stick to your discipline, make life easier for yourself. Separate those different instruments onto different brokers or different accounts. Now, some brokers, they allow you to open multiple accounts, right? So you can open one account for euro dollar, for example, one account for dollar yen, for example, or you can separate it into many different brokers. Let's say you have a stock broker and then you have a forex broker. Because different brokers, they have different focus specializations, I prefer to separate them. Stocks for my stockbroker, forex for my forex broker. In fact, there are traders who separate in terms of different methodologies. Investing, another account. Trading, separate account. You cannot mix both stock trading and stock investing into one account, because the main thing is it's very hard for you to journal, track your progress. So is this a stock trade or stock investment? If you know, you know. A lot of stock trades become stock investments. And also 2 years ago, I spoke in a hedge fund event, and this hedge fund manager basically said, for all the traders that I hire onto my trading desk, there are so many instruments to trade, right? I have all my hires focus on one thing first. This month, everything stocks. Don't go and dabble in no forex, bonds, gold, oil, silver. No. Learn one asset class first, then you move on to the next thing. If you're a beginner in forex, specialize on one currency first, euro dollar, because you need to understand this. That's what a lot of beginners don't know as well. Different currencies have different behaviors, react differently to different events, different circumstances, different macro factors, different technical indicators. Different stocks react differently too. Small caps, medium caps, large caps. Totally different behavior. You cannot use one indicator and apply it in the same exact way to euro dollar and then the same exact way to dollar yen. You cannot do that, okay? And if this helps you better, you can write this in your trading journal too and write down the behavior of that stock, of that currency during normal times, during news releases time. Is it very volatile, medium volatility, or low volatility? And based on this behavior, okay, add one more thing. In which trading session is it best to trade this currency, this stock? Is it the London-New York overlap session, London session, Asia trading session? In which trading session is it best to trade this currency, this stock? For each individual currency pair, each stock, what time is the best time to trade it? How do you know that? Based on back testing, forward testing. Okay, so this done. Third thing. If you skip to this portion, don't become a trader. Third portion, which you gotta put under your 1 and 2, trading strategy and methodology. There are lots of things you need to decide, okay? Are you more of a technical analysis focused trader? Or are you more of a fundamental analysis focused trader? Again, very important, because if you don't write this down, you're going to switch in between different indicators, different strategies based on your feelings again, okay? Technical, fundamental, or a lot of top traders do this, combine both, a hybrid of both technical, fundamental, which is what I use also. If you're a short-term trader, scalping, day trading, your focus would be more on technicals. But you also gotta take note of the news, because you don't want to open a trade when the news events are near, okay, are coming up, because news are going to ruin your robot trading algorithm and also going to ruin your trade. If you're a long-term trader, position trader, or even an investor, then you'll be focused more on fundamentals, but you use technicals to enter. Hybrid, Using fundamentals to generate a trade idea, sentiment analysis, and intermarket analysis, everything combined to generate a good trade idea, put onto your watch list. And when do you enter? When your technicals tell you to enter. Okay? Speaking of day trading, swing trading, again, you gotta decide, are you more of a day trader, scalper, swing trader, position trader, or you want to become a mix of both, an investor and trader, which is what I do. Okay, stock investing in the long term, but also I trade on the side. And once you've determined which type of trader you are more focused on, then you gotta determine what time frames do you look at. Okay, maximum 3 time frames. So let's say if you are a day trader, okay, you will look at H4 for the bigger trend, larger trend. Then H1 would be your entry time frame. Then 30 minutes to look at the details of the price action. You don't want to look at too many time frames, because if you look at all the time frames, there's no time in which everything is going to be aligned. Every time frame is going to be on a bullish trend, because by the time you need all time frames to go your way, you wouldn't be trading at all. You know what I'm saying? And also, when you're a day trader, super large time frames are not relevant to you because you're only holding for a couple of hours. And also, you gotta decide, are you more of a manual trader, or are you going to pursue algo trading? Okay, then this comes down to the next one, which is very important. There are 2 main types of trading styles. If you really narrow it down, discretionary trading versus systematic. What does this mean? Okay, discretionary is more of trading based on your own judgment. Of course, you still have rules, but it's more flexible. You adjust your trading strategy based on the current market conditions. So for systematic trading, to help you remember, think of system. I need to have a system, meaning it's fixed. So a lot of algo traders, they would be a systematic trader because they would program the algo and be like, okay, every time this happens, just help me take 20 pips. Then the cut loss level would be 10 pips, regardless of what happens, because I'm not monitoring the markets anyway. Do your thing for me. Okay? Whereas if you are more of a manual trader, you can pursue discretionary trading because you can adjust your trading style based on the current market structure, based on the current market conditions. But if it helps you make things more organized and clearer, make 1 page for each strategy. Just buy a nice notebook, okay? Go to my second channel, I have a lot of notebook reviews, and then allocate 1 to 2 pages for each strategy, okay? Go down to the specific strategy. For this currency, are you going to trade mainly using mean reversion strategy? Or is it gonna be trend following? Or is it going to be breakout trading? London breakout strategy, for example? Or is it going to be more of a momentum trading strategy? Okay, make sure you write this down for every individual currency or stock that you trade. Okay, so this done, okay. Then the 4th component, gonna have 2 main parts. What condition have to happen for you to enter a trade? Again, very important. Otherwise, you will enter any time you like, especially when you feel like taking a revenge on Mr. Market. And it helps to determine, are you mostly going to key in a limit order or market order? If you want to remove the emotional part of trading, you don't want to get emotional about things, limit order helps a lot. Or if you are busy, no time to monitor markets, limit orders also help a lot. Whereas if you have time to monitor the charts, then you can consider market order. But then you'll be more prone to emotional trading. Good thing about limit order is that You don't have to monitor that often, but the downside is that if the price doesn't go to that level that you have set, then you would have no open trades. Whereas for market order, you would guarantee to have open trades, but you'll be subjected to slippages. So it's better to sometimes wait for a better risk to reward ratio and then enter using a limit order. And make sure you have a checklist, okay? Make sure you have a checklist. I've already done a video on this. 5 things you need to look at before you enter a trade, okay? So let's say you have 5 criteria. The first one, like I've mentioned in the video, check the bigger time frame. When the bigger time frame is in a bullish trend, then okay, check. Now what you want to happen for you to enter a trade is to have at least 90% of your criteria be fulfilled. Ideally, all has to be fulfilled. So that's a high quality trade, because I don't want you be going around making low, mediocre quality trades just in the name of I'm a trader, then what should I do? If I don't trade, then I'm a plant. Then you end up making like a buy trade when only this criteria is fulfilled, but you don't look at the price action, you don't look at the current market structure, you don't look at the trend in the entry time frame, then it's a low quality trade. So 90% to ideally 100% of your criteria has to be fulfilled. But don't have like 20 criteria, you wouldn't have a trade at all. And your checklist also have to follow a sequence. The top few would be like a pre-filter. Then the bottom, let's say bottom 2 would be confirmation. Okay? Okay, now you would think that entry is the most important, right? So a lot of debate going on in the trading community. Is exit or entry more important? Now, of course, different people have different hypotheses and all that. I would say your exit is slightly more important than your entry. Because you know why? 2 people could buy at the same levels. If you set your stop loss over here, super tight, and your TP is over here, then your friend buy over here too, TP same place, stop loss slightly wider to account for volatility, price move down after you entered, stop you out, then eventually it U-turn, then it went to your initial target price. Whereas your friend, same thing happened, price U-turn, didn't get stopped out, your friend make money. But that doesn't mean that you don't put a stop loss, okay? I'm just telling you that where you set your stop loss level is very important, okay? Of course, your stop loss cannot be too tight, cannot be too wide. And what comprise of exit? Your stop loss level, okay? As well as your target price. Now, a lot of traders, they would scale in, meaning as the trend goes their way, they would open new trades, okay? Whereas if you're more conservative, you would gradually scale out. As the trade goes your way, okay, you would gradually take small profits, and you would add that with a trailing stop so that you can capture the whole entire trend. So you can determine for your strategy, are you going to use a trailing stop or are you going to use a manual stop? And there's another type of stop loss at your own risk, okay? Because if you don't have discipline, enough discipline to use a mental stop loss, the moment you look at the charts, you're gonna start rationalizing. You know, maybe it's going to be my lucky day today. I'm going to drag my stop loss, initial stop loss level, which is in my brain, slightly further down. Whereas if you have a manual stop, you can just set and forget. This is how you prevent emotional trading. And if you're a discretionary trader, you would have one more type of stop loss, and that is what I call a self-cut loss. So let's say an unexpected event came up. I'm not going to care about my initial manual stop loss level. I'm going to just cut loss real quick because this is a one-off unexpected event that is going to stop me out regardless of what happens, because it's so volatile. I don't want to take the risk. But try not to do this too often, otherwise again you start to rationalize. We are still at the fourth portion, guys, because this is also very important. The best traders know when not to trade, just as much as they know when to trade. In fact, that's a quote. A lot of my money is made in the sitting, okay, in the waiting, rather than in trading itself. So in your trading plan, also include non-trading rules. Let's say, for example, if you're a day trader, don't trade 2 hours before a high impact news event. High impact news, and only trade 1 hour after, so that the high impact news has settled down. Okay? And it can also be based on your personal lifestyle. Don't trade while you are having an argument with your wife, because instead of taking revenge on her, you take revenge on the market. When you are emotionally unstable, don't trade. There's a lot of study in this. It's also found out that, research has also found out that when you are sad, you will tend to go on a crazy shopping spree and buy things you don't need. And when you're at home, how do you buy things you don't need aside from going to Amazon? You can also buy currencies you're not supposed to buy. Right, that's that for component number 4. Then component number 5. It would be hard for beginners to believe that 5 is more important than 4. Okay, but what is point number 5? It's your risk and position sizing strategy. Gonna include a couple of things. Okay, include a couple of things. The first thing is, what is your percentage risk per trade? Don't go beyond 3%, okay? 1 to 3%. Okay, 1 to 3%. Based on your risk appetite, pick a number. Maximum percentage drawdown. Don't go beyond 30%, please. Okay. Maximum leverage. Don't go 1:1000, okay? Don't commit trading suicide. A lot of traders, they could make good money with 1:50 or less. 1:50 or less. Make sure you also determine what is your overall portfolio risk. Okay, because you're not only trading currencies, a lot of you are trading forex and also investing in bonds. And based on the relationship, the correlation between different currency pairs, different markets, okay? If you watch my intermarket analysis video, you know. If you want a specific video on this, let me know, okay? And also subscribe if you don't want to miss out on future videos like this. Because the common mistake a lot of traders make is that they would open multiple different trades which are all correlated to each other. So you would double, triple your risk thinking that you are diversifying. Doesn't mean that if you open a lot of positions, you are diversifying. It all comes down to correlation. Now this can be a whole video. I've done a whole video on this, intermarket analysis. Because markets don't operate in a bubble. Aussie yen is highly positively correlated to the stock market because most of the time it will move in the same direction. So when you open a position in stock market, index plus Aussie yen, you're doubling your risk. But if you open a position in stocks, open another position in bonds, it's negatively correlated most of the time, meaning most in opposite direction most of the time. So you are, in a sense, diversifying away your risk. So understand there's a difference between portfolio risk and also single trade risk. Okay? And one of the ways to measure a portfolio risk is to look at the beta. So if this stock has a beta of 1.24, it means that it's 24% more volatile than the stock market index. Next one is also very important. Of course, your win rate is very important. Okay? If you are a trader who really can't handle losses, then you need to have a system with a higher win rate, but you compromise a little bit on your risk to reward ratio. If you are somebody who prefers to, every time I open a trade, the odds are with me, okay? The pips are with me. Then you would focus more on having a good risk to reward ratio when you enter a trade, before you enter a trade. Let's say my risk to reward ratio has to be 1:2 every single time I enter a trade. If the risk to reward is not good, I wouldn't enter the trade. So if I do win in this trade, I would make 30 pips. If I lose in this trade, I would lose 10 pips. But with this kind of system, you will need to compromise on your win rate. But when you are right, you would make a better pip harvest. And when you are wrong, you only lose a little bit. So it gives you, in a sense, a peace of mind. So based on your trading personality, determine, do you want to be a risk-reward focused trader or a high win rate trader? There are successful traders with high win rate, but mediocre risk to reward ratio. There are successful hedge fund managers with good, super good risk to reward ratio, but subpar win rate, 40%, 45%, 50%, and they can still make good money. Bear with me right now, we have two more, okay? We have two more. Under your fifth component, write down when should I review my trades? First thing first, okay? Every single time after you've made a trade, whether demo, live, backtesting, record it down. Now this is a separate thing, this is a trading journal. If you want a detailed video on that, let me know too. Once you've recorded everything down, when are you going to come back and revise? Because after 24 hours, our brain is going to forget almost 80 to 90% of the things that we have learned. At the end of the day, review one time. At the end of the week, review second time. At the end of the month, review third time. Have a separate notebook for your trading journal. Don't mix things up because it's going to be confusing. For the final component, I can do a whole course about this on YouTube, okay? But I'm just going to write down what you need to take note of, okay? What is your trading psychology and discipline plan? How do you maintain this, which is super important? Now, of course, you don't have to write this down, but what you do every single day, believe it or not, is going to affect your ability to trade with discipline, to follow your trading plan. Because if this is not here, all this work will be completely wasted. One very simple thing you can do is to make sure that you get your regular workout. People who work out regularly tend to earn more money in general. So is that not a reason for you to go back to your gym? Don't waste your gym membership. Also, note down how long would be your break after a losing streak. Now this one you would require a bit of experimentation because some people would take 3 days and they could recover and come back to trading fresh, mentally fresh. Whereas some people need to take 2 weeks before they could pick themselves up again and then go back to trading. Also, if you know that you would tend to become complacent, become arrogant after a winning streak, you can also set a short break for yourself. Okay, after a winning streak, this is the most dangerous situationship. So I'm going to take a 1-day break from trading, from the charts. And because trading psychology is so important, you got to go deep into it and study everything in detail. So I'll put a free trading psychology course that I've made somewhere on this screen. So with that, subscribe and I'll talk to you in the next video. Bye.